So next up here, let's get into Apple's new iPhone sales in China.
Tuesday's all-time high as new data suggests those iPhone sales in China are doing better than expected. Steve Kovac is here with the details. Well, Steve, do tell.
I'll give you a caveat here in a minute, but first let me tell you what's going on here, Kelly. Counterpoint Research is out with this report today saying iPhone sales were up 20% year on year in China for those first couple weeks of iPhone 16 sales, and the growth was especially coming from the expensive Pro models. Now, I don't have to tell you, of course, that China is Apple's second most important market outside the U.S. and can account for nearly a fifth of all of its sales. And Apple's China business has been pretty crummy coming out of COVID the last couple of years, as that economy has been slower to recover. And the iPhone 15 cycle last time underperformed in China. That might be until now. However, one caveat here, Kelly, I'll note that Counterpoint has been wrong before on Apple's China sales. Back in April, it's right here with you, and they were warning that iPhone sales dropped 19% in the first 3 months of the year. It wasn't quite that dramatic. Apple reported overall China sales were down 8% for that period. That includes everything and including iPhone. This all comes as we play the guessing game for what iPhone 16 demand actually looks like. We've seen so many analyst notes over the last few weeks showing overall demand based on shipping times for online iPhone 16 orders appears to be muted so far, at least.
I have the new iPhone 16 Pro Max. I bought it and I upgraded from my iPhone 14 Pro Max. And one of the things I noticed about it is when you get the new iPhone, you have to get the new software. And I noticed there was quite a few bugs in relation to several things. A few things have been fixed already, which is good, but there's definitely was buggy. And that's why I hate, the moral of the story is whenever Apple launches a new software, never get it in the first month or two. Wait several months till they get all the bugs out. The other thing I noticed is the phone doesn't feel nearly as premium as my 14 Pro Max. The 14 Pro Max was like this steel, premium feeling phone. And the new phone just feels a little light. It feels a little not as premium, I guess you can say. So just a little thing I noticed. And also the size difference, hardly anything. I don't even notice a size difference. It's supposed to be technically a little bit bigger. As she said, is not much bigger.
The iPhone 15 cycle. And of course, we're still waiting to see how the Apple Intelligence launch coming in a software update by the end of the month impacts that demand picture. Stay tuned, Kelly, because we're going to get some fresh color from Apple itself when it reports earnings in less than 2 weeks. That's October 31st.
On Halloween. Okay,
yes,
that answers
spooky.
my question.
Hopefully it's not too spooky for them.
Exactly, which is when are we going to know for sure? So what do we know for sure about iPhone 16 sales right now, both in the U.S. and in China?
Yeah, what we can look at least the hardest data we have, and it's not the best, but it's the only data we have, is when you go on apple.com right now and you say, I want the iPhone 16 Pro Max, and it says, okay, it's going to come in 27 days or something like that. So the analysts look at those ship windows and compare them to what they were last year. The idea being, if the ship windows are long, then demand is great. If the shipping windows are shorter than they were last year, demand is worse. Others are pointing out, well, maybe supply is better this year. Maybe people are just waiting an extra few weeks for that Apple Intelligence launch, which is going to come by the end of this month. We just don't know. This is a really funky cycle to try to keep up with engaged demand. So really going to hinge on when Tim Cook reports earnings here in a couple weeks. What does he say as far as that first week of sales? What does that look like? And then any forward-looking guidance, what they're seeing the demand-wise, especially in China, especially here in the U.S.
I take it as a data point that the stock itself is back to all-time highs.
Yeah.
So it would tell you, okay,
there's excitement around it.
There's excitement, maybe, whether it is or isn't by a fraction here or there, who knows, but that it's enough. It reminds me a little bit of the Netflix pivot that's happening.
Exactly.
Is it the actual device count, or is it just that the company is firing it well enough?
Netflix is taking a page from what Apple did several years ago. Apple said, we're not going to disclose how many literal iPhones we sell. We're just going to do the bucket of revenue that we make from iPhone. Exact same thing we're seeing from Netflix. The idea being it's so much more than this one thing. It's so much more than the number of phones we sell.
Exactly.
It's the type of phone and the average selling price. So many things.
It reminds me, Jamie Dimon was also frustrated on the JP Morgan earnings call because he said, stop fixating on the net interest income number.
Exactly.
Stop trying to just plug it into your model so that you can, come out with a share price.
Out of these things. Exactly. Apple did a pretty good job over the last few years doing that.
All right, Steve, thank you very much. Steve Kovac.
Yeah, the bottom line is, in regards to Apple, it's a very similar story to many of these consumer companies, the Starbuckses and Nikes and so many of these big global companies that do business all over the globe, right? The bottom line is a lot of them set up a lot better in 25 than 24. because the consumer is going to be in a better place in 25 than they were in 24, right? And so, after 25, we'll see what happens there, but a lot of them set up a lot better. When we talk about China should be in a lot better place, especially with their customer base in 2025 than in 2024, right? With all the stimulus measures they're doing there and, just kind of things getting back to normal in regards to China. So China, I would say I'm much more bullish on for 2025 than I was for 2024. And then if we talk about America, certainly, which is always going to be Apple's most important market, and many of these big companies, right? Consumers looking much better for 25 than 24. So overall, the same thing in Europe as well. So overall, I think that's going to be there's a higher probability people are going to buy these sorts of things in 2025 than there was in 2024, right? Because you're not coming off of that year of just insane inflation like you had in 23 and then certainly in 2022. So the bottom line is in 2024, like not everybody could afford a new iPhone. Not everybody could afford a new pair of Jordans or another Frappuccino and those sorts of things. And so it just really hit these companies' numbers hard. But don't be surprised at all if, and don't think like these companies magically fixed things, right? In regards to their business models. It's just like if people have the money, they'll go spend. We know that. Like it doesn't matter if it's America, China, Europe. Like if people got money, they're going to go spend the money. If they don't have the money, they can't go buy the new iPhone. They can't go buy the new pair of Nikes, right? This is the bottom line in regards to that. Dan Nides on Apple's growth in China and big tech earnings.
You've also just come back from doing some channel checks in Asia. Are you seeing that same sort of enthusiasm over Apple?
I mean, this is so consistent with what we've seen. The renaissance of growth has begun for Apple with iPhone 16. I think China, look, that was the biggest issue. That was a headwind. Now it's a tailwind. They have mojo going into the next, I think, 6 to 9 months. And that's why, look, a lot of the bears, they've yelled fire in a crowded theater for the last month. But I think they go back into hibernation mode, in our opinion.
Well, they've been yelling fire, Dan, because it's a Chinese economy that's been looking weaker. It's a lot of competition. And that was the reason so many people have said this launch maybe will disappoint and it doesn't have the full AI capacity. Sure. So why didn't it disappoint?
Yeah, well, first, you have 100 million iPhones in China in a window of an upgrade opportunity. I also think the climate there, and we've seen it firsthand, it's definitely much tamer than a year ago, where really the U.S.-China Cold Tech War, I think, was front and center. The other thing is, it's the best product out there. I mean, if you look right now, the new Huawei phone, I'd say that's the equivalent of essentially an iPhone 14. So when you look at iPhone 16, this is globally going to be the start of an AI-driven supercycle. And again, a lot of those features get rolled out, called over the next few months. I think it's going to be a monster December quarter. I think that's why 6 months from now, we're looking at a $4 trillion market cap for Apple.
Wait, so are you saying that Apple's going to be able to take market share back from some of the homegrown heroes, from the Huaweis of the world?
Oh, yeah. I mean, look, they've gained, call it 300 bips of market share in China over the last 18 months. I think they gain another, call it 100, 150 bips of market share over the next year. And that's going to be very important because China is the hearts and lungs of the Apple growth story. And I continue to kind of handhold investors that this is the beginning of a renaissance of growth in Cupertino. And this data just further supports what we've been seeing in Asia firsthand.
Dan, we're also a few weeks away from just the big tech earnings in general. Just looking at some of the data from what we've had earnings so far, Microsoft, Amazon, Alphabet, Meta, $106 billion in CapEx in first half, almost 50% higher year over year. Most of that going towards NVIDIA and chips. Do you expect this earnings to hear that type of spending continuing at a similar pace?
I think for bulls, get the popcorn ready. As those calls start. Because everything we see, it's going to be a robust tech earnings season. I think Netflix kicked it off.
Yeah.
It's because of AI. You have $1 trillion of CapEx. And now, obviously, that's led by Godfather of AI, Jensen, NVIDIA. But I think what we see, not just from NVIDIA, but what we're going to see from the hyperscale players, Microsoft, Google, Amazon. I think software is going to be strong across the board, cybersecurity. I think tech rips higher going into year end. Clearly, election.
Yeah, one of the big techs I feel the best about going into this earnings season is Amazon. Feel really good about Amazon. I think e-commerce is going to be looking really good, especially as consumer continues to come back over this next 6 to 9 months here. And I think AWS growth is going to be pretty dang good as well. And then their advertising business continues to boom for them. I notice they're pushing heavy, a lot of promoted products. That's a lot of their first search results. Seems heavier than ever when I go on Amazon. So yeah, I overall, I definitely think Amazon's I think Amazon's looking pretty dang good for this earnings season.
Some volatility, white knuckles, but I think 20,000, we're going to be looking at 20K NASDAQ. That's going to be the conversation over the next 3 months.
So if the bulls are eating popcorn, it sounds like the bears might need something a little bit stronger, considering what you're saying. Okay, but there is this risk of an election, and not just an election, but candidates that seem to have both pursuing antitrust policies. Google's a great example of this, and I know you've written a lot about it. They're under the cloud of the U.S. government trying to break it up. Do we see a Google that's maybe more reticent to spend, to make big CapEx plans if there is this threat looming over them?
Look, in terms of antitrust, and obviously a huge overhang on Google, I mean, we saw a cover of Microsoft late 90s, 2000. Like, that is the precedent. I think Google, they learned from Microsoft's mistakes. They're not going to hold back. I think actually it's the opposite. They will double down. They'll fight this in court for years. There will be business model tweaks. But I believe very low chance of any sort of breakup happening. And I think Google, in my opinion, is probably the biggest risk reward in terms of as a large cap tech stock. I think $30-$40 upside here in terms of what we see, just even on some of this antitrust overhang.
So antitrust overhang happens, and unlike Microsoft, which kind of pulled back after some of the action against them in 2000, you think Google's going to go full force into things like AI and that sort of thing, even with this threat?
It's a Game of Thrones. It's a battle right now in big tech. They can't just hold back because of this. And also look at Apple and others. It's not just Google that's under scrutiny. Gates' biggest regret from Microsoft was holding back spending in that period. Other big tech players have learned there, but we are still a 1995, almost 1996 moment for tech, not a 1999 bubble moment. I think that's what's going to continue to play out going into not just year-end, but 2025.
What did you make then of the Bloomberg reporting earlier this week that Qualcomm was kind of pumping the brakes on looking at Intel to take it over until the election happens and uncertainty there?
I mean, being tied to Intel is a nightmare on Elm Street. So the last thing you want to be in this market is tied to Intel. Even on the ASML and everything else, look at TSMC. Look at Godfather of AI, Jensen, NVIDIA. You want to be tied into the left lane, the Bugattis going 90 miles.
Yeah, TSMC also looked really, really good there.
Not the minivans 45 miles an hour on the right lane.
So it's just an excuse to kind of back off of Intel? It has nothing to do with politics? Is that what you're saying?
I mean, I'm just saying right now, you do not want to be tied to Intel in this market.
You mentioned ASML and TSMC. It's so funny how this narrative has been so whipsawed this week. ASML comes out and it's doom and gloom and maybe the chip boom isn't as big. TSMC completely blows that narrative out of the water. What do you make of the divergence between the two? Were we just misreading what we heard from ASML?
I was shocked. We talked about when ASML hit. That to me, that's more legacy on the chip side related to Intel. The fact that the AI names were down there, I mean, that was a gift. You look at TSMC, that's the indicator. And I think, look, right from Asia, demand to supply, 15-to-1 demand to supply. And I think that is just not just positive for NVIDIA, it's positive for AMD and others. But I think that's why in this market, you got to be careful in terms of some of the reads.
And in this market that is volatile off of some of these things, does that tell you, Dan, that there's still some weak hands in these stocks, that there's still some nervy investors here that can kind of run for the exits on signs that, as you point out, might not be as telling as they are?
Yeah, I think that's a great question, because I think you're definitely seeing that. Yeah. Any sort of nervousness, some white knuckles, head for the elevators. But what we've seen over the last year and a half, 2 years, is that a very similar sort of, I think, chapter play out. But it is 9 p.m., almost 9:30, in the AI party. That goes to 4 a.m. I'm not saying in the midst the DJ stops playing music, there's glass on the dance floor, but this is a party. I think it's really unprecedented in the last 40 years.
With lots of popcorn at it.
Popcorn is what you get ready for those earnings call with tech coming up.
Yeah, so in terms of big tech, I think Microsoft earnings will be fine, as they always are. I think Apple's earnings will be fine. I'm not expecting a huge move from Apple or Microsoft. Google, I think they'll be fine. They just still have the government's overhang going on in terms of that, right? NVIDIA is going to be a banger. I think they're going to double beat. And then I think they're going to kill their guide as well. So I think they're set up really, really well for maybe one last hurrah bull rally there. That's going to be pretty epic. And then who am I forgetting? Oh, Tesla. Tesla, I think, is actually somewhat promising. I think the story's getting better in regards to Tesla, and I think we could be looking at a Tesla here where, the numbers start getting better. The earnings per share start getting better. The margins are getting better, revenue and everything. And so Tesla, I'm not super optimistic on Tesla in the short term, but I'm getting more optimistic on kind of the short term in regards to Tesla, right? How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Alrighty, next one up here. Microsoft takes aim at Salesforce with new autonomous AI agents.
Today, launching 10 autonomous agents to help businesses with things like sales, customer service, or accounting. And that'll be available for public preview beginning in December. Our Deirdre Bosa has more on how this could be the next leg in the AI race on today's Tech Check. Hey, Dee.
Hey, good morning, Carl. So AI agents, yes, shaping up as the next leg, battleground, buzzword, and enterprise AI. Microsoft's announcement, it comes just days ahead of the general availability of Salesforce's competing agent force, and it pits these two companies against each other since they're essentially doing the same thing with these tools, which is creating virtual employees or supercharged customer service chatbots that can automate tasks. Now, they're both hoping as well that agents can better sell their tools, and they're promising that it'll deliver better results as well. As our Steve Kovac has reported, Copilot has underwhelmed customers, but the big question now is whether agents will be able to live up to expectations. And those expectations are certainly building, led by who other than Salesforce CEO Mark Benioff, the great hype man himself. Leading up to this release from Microsoft, Benioff has been taking every chance he gets to slam Microsoft's current Gen AI product, Copilot.
Copilot experience for so many customers has become the Clippy experience. What I mean by that is they're just not getting the value that they want.
We just don't see Copilot as that key step for our future. In some ways, they kind of looked at Copilot as the new Microsoft Clippy. And I get that.
And again, on Friday, posting to X, Copilot is more like Clippy 2.0. He really does not like Clippy. And for those that might not remember, this was this paperclip-shaped assistant in Microsoft Office from the late 90s and early 2000s that gained a reputation for being intrusive and annoying and not particularly useful. Benioff, meanwhile, mentioned the word agent 65 times on his last earnings call. The year-ago quarter, just 5 times. Microsoft, and I found this interesting, guys, was actually talking about agents a year ago as well, but hasn't been pushing it as much on earnings call. Today's announcement, that is a major acknowledgement that it wants to be seen as this new, more innovative agent space. NVIDIA, meanwhile...
Yeah, in terms of Benioff, by the way, I think it's important. Anybody that ever wants to get into sales, definitely watch Mark Benioff over the years and really pay attention to his interviews, pay attention to his presentations. I think he's one of the best salesmen in history. That you could ever pay attention to. I think that man's phenomenal, right? And so, and it's interesting because in sales, a lot of times they say don't mention your competitors, but he's certainly not afraid. And I would never go against Benioff. Like whatever he does, genius. Okay, so if Benioff says you can talk about your competition's products, I say, damn, okay, you can talk about your competition's product.
Maker and Gen AI has also been talking up agents more, right? Both on earnings calls and outside of them. On the Gerstner Gurley podcast about a week ago, Jensen Huang envisioned NVIDIA as a 50,000 employee company with 100 million AI agents. So keep an eye out this upcoming earnings season. The mentions of agents could rise dramatically, guys. A year ago, maybe it was all about chatbots, but this year it's going to be agents on the earnings calls.
Wow.
Well, I was looking at Goldman over the weekend, boosted their Microsoft CapEx forecast for 2027 to $82 billion, Dee. They are spending on CapEx more than any other hyperscaler.
It's a great point, and that raises the stakes, right? That is why they're putting out new products and hoping that there's going to be better ROI for their customers, because as we've sort of seen reported, Copilot hasn't necessarily lived up to the expectations, but an agent is a different product. It can automate tasks, so it should supercharge productivity, and hopefully, certainly, Salesforce and Microsoft and others in the enterprise space are hoping that companies start to see better efficiency, better top-line growth, better earnings power, and agents may be the one to unlock that, but we'll see. It could also be overhyped.
We were just figuring out chatbots. Now we got to move on to this. Dee, great story. Thank you, Deirdre Bosa.
Thank you.
Yeah, 100%. You know, I was looking at Microsoft versus Salesforce kind of valuation metrics and things like that here on 1000X, comparing those companies, right? So as far as forward P goes, Microsoft 31, Salesforce expected to be 27, almost 28. 2-year forward P, Microsoft's around 28 roughly, but then Salesforce jumps to 26 here. Now, as far as next year expected earnings per share growth, about 17% for Microsoft, which is a very nice number. 50% plus here for Salesforce. So analysts are very bullish about earnings per share growth with Salesforce next year. Revenue growth-wise, a little higher for Microsoft than Salesforce. That could be just maybe the crazy amount of spending that Microsoft's doing here. So, and then as far as net margins, Salesforce certainly has a long way to go to get back, but maybe there's some of the profit recovery here, right? Gross margins actually ahead for Salesforce versus Microsoft. So, I mean, if I had to buy one, I might actually be a little more inclined to buy Salesforce over Microsoft. I mean, I don't love either stock, but I do like both. That's what I'll say about those sorts of stocks, right? Alrighty, next one up here. Kramer stopped trading on RH.
Things to look at, which is available to anyone watching the show. Just sign up. And there was a note from Wedbush today that even though you think it may be late, RH, Restoration Hardware, has been upgraded. I know that Gary Friedman preferred to call it RH, the CEO. But I've got to tell you, this thing may just be beginning. The huge number of shares bought back by Gary, and I think that the business is on fire. He told me personally that they have now inflected. He was waiting to tell me until they had inflected. This thing is a rocket ship from 240 to 360. Maybe if it comes back, you buy some, but you can buy some right now.
Wedbush targets 430.
Yeah,
they'd say that might even work even if the macro doesn't cooperate.
True. I mean, and his whole strategy, Gary's strategy of putting these beautiful galleries all over the world is really resonating. And look, lower rates are going to help. He got hurt by the worst. There was a housing turnover recession that hurt him. But I urge people to think about this as an investment. I think it's very, very good.
So tonight, Banco Santander.
Ana Botina is the largest bank in Europe.
Yeah, I don't love RH. I do think they set up a little bit better if we can get the high-end housing market going. But I don't know. The high-end housing market still seems like it's in a troubled place. I'll be honest with you guys. So maybe it eventually gets rolling. But yeah, I don't like what they've done with the balance sheet at RH either. So that kind of troubles me. But great company, though. I really like it. So, alrighty, guys. Appreciate you joining me as always. Thanks so much for being here. If you're looking to access my Patreon, that's going to be pinned comment down there to see the stocks I'm buying, selling each week. Plus, there's a Discord chat for that as well. I also have one that has a Become a Master Stock Market course attached to it. Prices are about to go up here very soon. 30% for people that don't join here over the next few days. So do be aware of that, okay? Alrighty, much love and have a great day.